Thank you, Giovanni, for this introduction. You actually helped me introducing the book, which is not a book on the Belt and Road. Let's state it from scratch. It's a book on how China is leveraging on financial power to get political, say, results. And the idea of this book came to me, over time, over the last now 7 years, even more since the launch of the Belt and Road, for two main reasons. The first is that in Italy, maybe we have been very biased, and still I think we believe that Belt and Road is ports and trains or something similar. But Belt and Road is a massive program included in the People's Republic of China Constitution, in the party constitution, a name of the state of the People's Republic of China. So very, very broad in scope, in scale, and with very different levels. So maybe ports and trains and ships are the minor part of it. And so I was very skeptical when reading about all these, commentators about Belt and Road in Italy and so on and so forth. And then came March 2019, on which I won't discuss anything today, because it's not exactly included in the book and it's very parallel. But then, that gave me the further push to write something about not the Belt and Road, but about, say, a second, another policy that the Chinese government has been pursuing since, say, 2009, more or less. Well, officially it's 2009, but it's a kind of a shift in policy scope that actually happened in 2009 officially, but it's it's been progressing since many years before, which is related to currency policy. I mean, how to handle the fact that China is a big trader, has a big economy, but has a very, very weak currency. But not because it's not actually, convertible or it's not accepted by policy, but it's because it's relying totally on the dollar system by definition. And this is financially complicated, but it's being, since the great financial crisis in 2008 and 9, has been politically unbearable for the Chinese government. So financially and politically very, very complicated to accept. And that's the reason why 2009 has been the year when the Chinese leadership accepted the Central Bank of China position that the renminbi should undergo a very different path towards an increase in the international use of the currency. And this is the second inspiration for the book. International use of renminbi is not internationalization of renminbi. Actually, they are very different, and they are, competing with one another in a sense, because renminbi is not going. I mean, I can. I'm not sure, but the Chinese government is reinstating it again and again, that it's not going to be a freely convertible currency. And we can understand this very, very clearly, because otherwise financial instability would be very high in China, and this the Chinese government cannot accept. So the international use of the renminbi is a substitute for internationalization of renminbi. So this is the other major idea that inspired the book, which is on finance, money, and might, so power, on which the Belt and Road is a platform. I mean, it's the vehicle through which, I mean, also many other pillars, but the financial pillar called financial cooperation. Officially, the fifth pillar of the Belt and Road is financial cooperation. Nobody talks about. Why? Because we in the West, we believe, and we actually define financial cooperation as very different thing. It's not internationalizing of something. It's just financial cooperation with usually developing or emerging economies, usually. Since the financial crisis also between developed countries, of course, because of the lack of the dollar scarcity that happened those years. But then this is a very, limited issue. Financial cooperation for the West is, financial cooperation with developing countries. So we actually tended to underestimate this pillar, which is the focus of the book. Now I share my screen. I wanted to give you the flavor. This is not, of course, an purely academic presentation, because, of course, this is not a purely academic book. I wanted it not to have any charts, any figure, any footnote. This is a kind of a narrative. It's a story. I put together a lot of information. Some, of course, some research, of course, very, very well grounded, but a lot of information on the news. I try to put together the puzzle, which is still, a design in progress, through which the Chinese government is actually daring to follow a very, very peculiar policy towards the international use of the renminbi through the Belt and Road also, and which has no precedent in history, because if you think about not the dollar or the pound sterling, of course, but if you think about the Deutsche Mark or the yen, for example, they underwent a standard process of internationalization, as the normal way of freeing the currency to demand and supply interaction, which is not going to be the case for China. So they are actually pursuing a very, very peculiar and ambitious strategy, which is not only a policy, it's a set of policies, and which took me the 3 chapters in the book to try to put together. Please let me know if you see my screen, because I'm not very aware of it.
Not yet, but
can you see it?
oh. Marta, can you help in sharing the screen?
Okay, from Condividi below, you can share anything on your screen, or you can select PowerPoint or whatever. It doesn't work.
What I did.
Okay, still doesn't work.
Well, I'm not aware of it because I see my screen, but I don't know if you see.
No, we don't see it yet. I have a backup of the slides, I guess.
Alessia, beside the audio video, there is a Condividi.
Yes, this is what I did.
Okay, Marta will do that.
Okay. Can you send me your slides, Alessia? I can.
Marta, se no prova da partecipante a togliere e rimettere chiunque può condividere.
Sì, perché io ho condiviso, ma non me lo fa fare.
Ok. Prova adesso? No, allora lo condivido io. Solo mi dovrai dire quando cambiare slide. Mm. L'ultima versione di PDF va bene, giusto?
Ce l'hai?
Sì, ce l'ho.
Ok.
Ce l'ho.
Allora chiudo la mia.
Sorry for keeping you waiting, but almost there.
Ma siete sicuri di non vedere il mio schermo?
No, adesso sì,
No, it's okay. Now we can.
c'è il titolo.
Yes, the first slide is here.
We see the first slide.
Okay. So it's my screen, it's not Martha's screen.
No, it's mine.
Oh, okay.
So you should tell me when we change the slide. I will
Okay.
drive.
Oh, okay. So again, oh, sorry, it's a little bit confusing. Okay, so I'm on page number 2 because I cannot see your screen.
Okay.
Can you?
We see the
Okay.
second slide, not
Okay.
another book about
Okay,
the.
here we are. Okay. Okay, so this is not a book about Brie, but a book on how the Belt and Road serves as a platform for overall China's integration in the world economy. And the 4 different levels that I summarized there are the political integration, meaning the network of support from third countries that China has been building since many years now, counting on friends around the world. And this is very important because, you know, in the international multilateral fora, China actually needs a lot of support, mainly from developing countries, being herself a developing country and leading. Also, she in Davos said that China is set to lead developing countries as the US has been leading developed economies. But the difference is that developing countries are very many more than developed countries. So how many they are is very important for China because then they are counting on, say, friends. So the political network of relations through the Belt and Road, not only but mainly now since 2013 through the Belt and Road, is one of the levels of through which Belt and Road actually serves as a platform for China's integration. Then there's an institutional, let's call it institutional level, made by all the agreements, and again, mainly bilateral agreements, either trade or investment, or those memoranda of understanding, which is a very peculiar format of agreement that China has been, you know, offering a number of countries now. Then we have an operational level, let's call it operational level, the thousands of investment projects that Belt and Road has been, financing all over the world. Of course, since 2003, more or less, China has been investing a lot all over the world, mainly in Africa, Southeast Asia, and then in Europe and all over the world then. But since 2013, this has been put under the umbrella of Belt and Road. It's kind of a maquillage operation. I mean, it's the same business as usual in terms of investment abroad, but now it's called the Belt and Road. So it's really a kind of a framework that actually collects all the levels and all the bilateral relations that China has been building before and continue to build, over time. And then finally, we get to the financial level, which is what the book is about. So the financial network of either relations, informal relations, formal relations between central banks, the so-called financial cooperation, I mean, Chinese way, that actually is heading towards a very simple and complex aim at the same time, which is the international use of renminbi. The old book is yeah, you can go ahead, Martha. Yes. And the old book is a way to tell a story of how first this strategy has been, developed before 2009 and before 2013. The Central Bank of China actually wanted the government to pursue such a strategy, but the political resistances were such that only with actually the kind of support of Belt and Road, or the platform of Belt and Road, did the Chinese government actually change its mind and actually accepted to make some of the steps that we'll be describing further below. So this is what I was mentioning before. So enhancing the monetary policy coordination and bilateral financial cooperation, which is called this financial integration pillar, is within the Belt and Road since the very beginning. Maybe because this has been actually considered as a form of international financial cooperation as usual, we have neglected this pillar. But in fact, this is a very it's a very important pillar, but very different from what we have been, expecting before. Marta can go ahead. So the first point I would like to mention is why financial cooperation is essential in the Belt and Road. Mainly because now we have seen more than 7 years down the road, and it's actually a lot of dollars that need to be collected to finance projects. And first, it's dollars. And of course, the renminbi system is based on the dollar. And this is, of course, the usual way. And thanks to the dollar, because otherwise the China wouldn't have been able to become such a big economy without a dollar system on which to peg now the value of a currency in the way that she wanted to have it, of course. But I mean, the currency policy has been a very central pillar of all the growth strategy of China. We're not going into that. But financial cooperation is very crucial now because China cannot continue financing either with their own sovereign funds, of course in dollars, or with funds from other institutions that are partly Chinese or multilateral, as the Asian Infrastructure Investment Bank, but still requires a lot of financing that China has been, starting over the last few years, but of course cannot finance by herself. And this is why international capital, multilateral capital has been increased through the AIIB to finance the Belt and Road. This is already something very strange to hear because, AIIB is a multilateral institution, financial institution, development bank, if you want to call it, but actually is actually pursuing an objective which is included in the PRC constitution. Of course, in international infrastructure, especially in the form of cross-border infrastructure, is very crucial to developing economies because this is a very central ingredient of any development and growth strategy that developing countries might want to have in place. Of course, the infrastructure gaps are huge in Africa, Southeast Asia, Central Asia, much more than any, and the combination of all development banks all over the world can finance. But still, this fact that we have a multilateral bank with a lot of countries as stakeholders in the bank that actually are financing something which is included in the Constitution of the People's Republic of China is really something very different from the other development banks. So financial cooperation is essential because China needs other countries' money to finance her own Belt and Road. Marta? And this I already mentioned before in terms of shift of strategy towards the so-called renminbi internationalization. Intended as international use of renminbi. Since 2009, the first, shift was due to the awareness of the need to reduce financial and political dependence from the dollar. And then since and even more so since 2013, the synergy with Belt and Road, mainly through trade finance and what we will see bilateral currency swaps that started already in 2009, but then went even further down, and now there are many more than any other countries of the world has in place, actually took the form of this financial cooperation, or also called financial integration of China with the rest of the world. Marta? Now I've included a set of charts. Of course, they are not in the book, but the presentation is much livelier with some charts that actually show why the renminbi and all the different fields where the renminbi, either trade or finance or investment, or capital markets, where the renminbi, there's no discussion about the fact that renminbi is not an international currency, despite everybody's talking about renminbi becoming an international currency. If you read recent work from international monetary economists, I remember always the wonderful Benjamin Cohen, not very recent, but very, very insightful. There is a number of reasons, even very well argumented, why there's no discussion about renminbi being an international currency, okay? Because there's no condition. Even if you take only 3 conditions, there's none of it. So this narrative that China is building and building again and again around the renminbi being or becoming an international currency is actually the way China is convincing other countries to invest in renminbi denominating asset or to continue cooperating financially with China, despite the fact that renminbi is not an international currency and is still under the stronger control of the central bank, People's Bank of China, which is under the control of the party directly, and that no rules similar to any other country are in place in China, which is the very reason why international capital, I mean, in my opinion, shouldn't rely in any sense on a renminbi denominating anything. But the narrative is very powerful. And the narrative is supported, I mean, there's a synergy between the narrative and the international network of agreements that China has been building around this strategy of increasing, expanding the international use of renminbi. Marta, you can go quickly through the next 5 or 6 charts, where you have a number of, you know, comparisons between renminbi and 3 or 4 major international currencies. And although renminbi is, you know, is just after the Japanese yen, usually in all of these statistics, the divide is very important between the second, the euro, and the third, usually the pound, the yen, and the renminbi. So if we take it that there's only one international currency, I mean, and the second is already something which is accepted as a kind of a second, you know, secondary international currency, even if we cannot, I mean, there's no such a second international currency, but being the 5th position is being nowhere. So the narrative, why did I put this, these charts? Because the narrative here is very powerful, because China has been also successful in convincing the IMF to include this in the special draw and write basket in 2015. And this was a purely symbolic and political achievement, because now, since 2015, I mean, all central banks are allowed to have renminbi in their balance sheet, which is exactly the vehicle through which all the agreements, say, call it financial cooperation, are relying upon. Marta, you can go quickly. Okay. Okay. Back. One again. Back. One back. Okay.
No?
No. Avanti uno. Torna indietro di uno. Okay. If I hope you can see the numbers. If we look at one of the fields where renminbi is the most internationalized, let's say, it's trade finance, which is one of, you remember before, trade finance and bilateral currency swaps as 2 major instruments, tools that China has been building as a network of international network of trade finance agreements and bilateral currency swaps, which should be heading this strategy of increasing international use of renminbi. We are still in trade finance at 1.30%. compared to, of course, 95, almost 95% of US dollar and euro combined. So there is no discussion about. So why are we, discussing about international use of renminbi and a very specific strategy of the Chinese government to have this international use of renminbi if renminbi is only 1.30%? So is there any discussion around this, or is there only a Chinese narrative around it, or what is there around it? And the point that I make in the book is exactly a combination of all the fields where China is increasing, either geographically or, you know, in terms of specific markets, the share of renminbi used in transactions, so has to have a kind of what has been also mentioned in financial by financial commentators in financial news, as building a kind of small but growing renminbi block, which is not a block only in geographical terms, but it's also a kind of a block in terms of markets where and partners where China actually say is inducing other countries to use renminbi, you know, by the power of our own, you know, size and might. Marta? So trade finance is one of these fields, and then towards the end we will see which are the countries that now, and they are in the news actually almost every day, either one or the other, also not only in the financial news but also in the political news, for you know, announcing that they actually are using renminbi instead of the dollar. And of course this is I mean, no reason for concern, financially speaking, for Washington, but politically speaking, is very, very worrying and dangerous if you think about Russia, for example, but we will go through that. The second network that China has been building is the network of so-called bilateral currency swap agreements, a very common standard way by central banks to have pools of liquidity of currencies that they may need, that they are actually latent. I mean, they're activated only if necessary. Argentina, for example, when short of dollars, actually activated the currency swap with China in renminbi to pay China. Okay, so this is a very common tool everybody has, but China has actually decided to have this as a format of, you know, financial so-called integration. And if we look at this in a network of CBS, the bilateral currency swaps, it has been growing massively since 2009 and up to now. Marta, you can go one. This is 2009. We only have 5. So beginning in 2009, China decided that this would be the vehicle to actually put international integration in place. Let's go one forward. This is 2017. And we have many more, but, you know, data are, you know, lagging behind. You see that this is actually the format of the international so-called cooperation that China has been building over time. And well, it's nothing new, in fact, just, you know, simple agreements between central banks, nothing very special. But actually, if you look at the map, you start, you know, perceiving the design which is behind, you know, the overall, say, strategy that is, of course, relying on the Belt and Road, but is very, it's more general, and actually use this swap agreements to actually be able to, and this has been also stated by the Chinese monetary authorities, to be able to help and support countries in need of liquidity. And of course, this is a financial implication, but also a very high political implication. This is in place. Nobody asks where this will be going. Of course, this is not, I mean, very dramatic network of anything, because it's just pools of renminbi, bits and pieces of renminbi here and there. But in some circumstances, let's say Argentina or Russia or some Southeast Asian country, or Africa, these days in Africa, they may pop up as being the solution of a liquidity crisis in renminbi, and this, I mean, proves that the Chinese strategy to increase political power through the tools of finance, I mean finance brackets, is very effective. Marta, we go now down to the, no, we skip this. Okay, let's start from this. We are running out of time. So all of this to try to elaborate why renminbi actually, of course, is a currency for trade transactions increasingly, but mainly as being designed as a tool of soft power. Where are the, you know, the fields where this soft power is being built? The book has chapters on this. In trade, international trade transactions, renminbi has been increasing dramatically. Not if you take the aggregate world data, but if you take some countries, say Russia, say Indonesia, many others, you have now more than half of trade between China and those countries regulated in renminbi. And of course, for many countries is nothing very different, but for Russia, it's very different. And we saw, I think 2 or 3 weeks ago, Foreign Minister from Russia, Lavrov, in Xi'an, saying that they are getting out of the dollar. This was kind of, you know, of course it was in the news, but something very quickly commented. And this is a big news. Because, you know, if you're out of the dollar, you're out of the dollar system of sanctioning countries that are not, you know, behaving according to Washington. And this is what Russia wants to achieve. And this is why Biden said to Putin that they want to have a summit together, because the message was very, very clear and effective. We are moving through the levels of trade transaction, the currency with which the trade is regulated. We are getting out of your system, and we are getting out of your, you know, capability of imposing sanctions on us. And this is very much more political than financial, of course. So renminbi is being built as a currency to have political power, to have it abroad, and to be able to keep it at home. Because if you don't open your currency exchange rate regime, which I bet will not be the case for China, it's too much a source of financial instability to have a freely floating currency. So I'm sure we will never see that, except for, you know, very limited pools of transactions or actors, institutional actors that will have some freedom of movement, but otherwise we won't see a freely floating renminbi ever. So the aim is to have a currency still weak as usual, but very powerful in terms of political, say, might. One example, as I was mentioning, is international trade, but also in commodity pricing. China is the first importer of many commodities, and which are priced in dollars. All of them are priced in dollars, but a couple of commodity markets in China are growing very quickly, and China is trying to have renminbi pricing. Renminbi pricing is another shift, mainly political than, you know, just as a currency of denomination of prices. Because if you are denominating prices in your own currency, then you have a market power which is much higher than otherwise. Is China heading towards a renminbi bloc? Seems so. President of Indonesia last summer, I believe August, or but also months before, suggested why Indonesia shouldn't be adopting the renminbi as a currency. Nobody, I mean, I was kind of shocked because renminbi is not convertible. I mean, how can you even mention such an option? But it was in the news, in the financial news, in the Financial Times, in Bloomberg, everywhere, as something very normal, very comfy. It should be so comfy to have renminbi instead of our own rupiah or something. So this, you know, this is exactly where the political power and the narrative is finding a way to actually create incentives for country to actually being captured into the Chinese, you know, strategy. There's also a kind of smallest, of course, very smallest and very different rise of renminbi in Europe. It's a big chapter. It's very different from what has been happening in Southeast Asia, Russia, Central Asia, some African economies. It's just a kind of cooperation between either central bank or asset management funds that are, you know, cooperating very, very massively with Chinese counterparts. I think it's very dangerous politically, but nobody is discussing. My point in the book is nobody anywhere is discussing this as being part of a Chinese design to have a renminbi as a very powerful tool in place without ever changing the rules of the either monetary policy or currency policy, with all the countries supporting this actually strategy without even realizing. The very point of the book is exactly this one. It's very, I mean, business as usual, agreements, currency swaps, trade finance, increase the number of countries that are supporting China, either in the UN system or for, you know, supporting project localized somewhere where China has very important interests in terms of securing resources or energy or food or something else. But nobody is discussing the international implications, financial maybe, but mainly political implications of this very strategy of having a renminbi circulating without changing and reforming the system. And just one last point, very, very, very quick, is this heading toward a new debt crisis in developing countries? I think we have 5 or 6 sovereign defaults this year, last year. So when I was asking this, we hadn't, I mean, maybe only Zambia had already defaulted or almost defaulted because the IMF still wanted to see whether there could be restructuring. But anyway, when I was writing the book, only Zambia was on the verge of defaulting. But now that the book is out, we have many more foreign defaults. So are we heading to towards a new debt crisis with Chinese characteristics? According to an IMF China study about Chinese foreign lending, very, very, very important. The only study ever on Chinese foreign lending, putting together very different sources of information about how high is actually Chinese lending compared to what we expect it to be from the standard, you know, sources of information. According to this, we are heading towards a very, very dangerous and widespread debt crisis from a number of developing countries, the more indebted and even the others. And on average, the foreign indebtedness of these countries towards China is very high, which is heading again towards an increased political power of China towards these economies. So, and this ends a little bit the book. But the bottom line is, the more the renminbi is going to circulate without China reforming the system, the less China will have the need to internationalize the renminbi. Chapeau.
Thank you very much for this.
Sorry, I took a lot of time.
No. Thank you for this presentation. That I think we understand much better the key message of the book and the title, Money and Might, Finance and Power. So I give immediately the floor to Ignazio Musu. Can you, as a first discussant, can you share the screen?
Yes,
Ignazio?
yes, I hope so. I have to be able to share the screen. Let me see.
It's not much. Very good, very good.
Very
Very
good.
good.
Okay.
Thank you.
Can you see it?
Yes, perfect.
Okay. So I just prepared a few slides. I don't want to take too much time, but just these slides come out from my reading of the book. So there are some points that you will see I have stressed that hit me in reading the book. First, I would like to thank Alessia Amighini for writing a book which covers a gap, because there are many analyses concerning the success of the Chinese economy, but they do not deal with sufficient attention to monetary and financial topics. The book, of course, links the Chinese project of internalizing RMB to the Belt and Road Initiative. And about the Belt and Road Initiative, I would only notice two things. First of all, and there are also questions that I am raising to the author. It is unclear how this big project is being developing now after the COVID-19 pandemic. Although it is clear, at least in my seeing things, that now Belt and Road is something more than infrastructure project. Think about the so-called digital Silk Road. Think about the health Silk Road, which is now becoming very important with the problem of vaccines, although there are some problems now on Chinese vaccines around the world. And then also this new dimension of the Belt and Road, which is the so-called Arctic Belt and Road, which exploits. There is a paradox in China. China aims to be a protagonist in fighting climate change, but if climate change continues, the Arctic will become a way of communication, and China is willing to exploit this way of communication. Of course, it comes out from my reading of the book that Belt and Road is a potential vector for increasing the use of RMB. There are in investment, trade, but clearly from the book and also from the slides we saw before, it appears that the Belt and Road had a very low role in promoting RMB internalization. But the most important part of the book, in my opinion, was this idea that somebody called the currency internationalization with Chinese characteristics. So, and the presentation of Alessia Amighini today stressed very much this idea that China becoming very powerful with its currency without fully internationalizing it. The reasons, as you know, are that China doesn't want to achieve full convertibility, that it doesn't want to abandoning some control on the movement of capitals. It wants to remain able to act on the exchange market. Alessia mentioned the ways through which China is pursuing this internalization of its currency, the currency swaps, that revealed themselves not so relevant after all. And the financial aspect And here there was one slide, if you remember, mentioning the different offshore financial centers. And there was one slide that was skipped, but in my opinion was important, touching the issue of Hong Kong. This is a question I would like to ask Alessia Amighini. She seems in the book to believe that the weight of Hong Kong is declining with respect to emergence of other mainland financial centers such as Shanghai and Shenzhen. Of course, it is true that there is this widening of the financial center. I'm not sure whether the power of Hong Kong is really reducing. Because it doesn't seem that, for example, all the recent protests and repression had triggered any capital flight, any business exodus. In a recent article that I read on The Economist a few weeks ago, it was written that the global capital seeking to reach the Chinese market has drawn a lot of investment to Hong Kong. So this is another question I would like to make. A financial way towards renminbi internationalization. Of course, this is linked to some reforms in the financial system in China. Will further steps toward convertibility required? Are in the presentation I just heard, it seems that China wants to become powerful with this currency without moving towards convertibility. I would like to have some further comment on that, particularly on the role of financial reforms within China, because there are still some open problems, which, for example, recently China has announced new rules to protect financial competition and fintech competition, exemplified very recently by a fine to Alibaba of almost $3 billion. But these actions are these really actions toward improving, modernizing the fintech sector, or are they actions aimed at making clear that there has to be a stronger control of this sector by the party state? I call party state this combination of communist and Chinese Communist Party, the government. Related to this is another slide that was skipped in the presentation, which concerned the new project of the digital renminbi, which is a kind of digital currency different from any cryptocurrencies which we are used to look around. And because it is issued by the government and it is a central bank currency, digital currency. Again, this seems to be a clear example that China wants to use this new tool, this digital RMB, to reassert the party control over the Chinese not only fintech industry, but not only towards the huge private companies in this area, like Ant Group or Tencent, but also to increase its control on the economy and society. And this is clearly something that, I believe that around the world there will be some skepticism in using a currency that through such an important project such as digitalizing it create problems on the credibility of China on the international scene. Final point is related to two aspects of one related to RMB and geopolitics. There has been this recent regional comprehensive economic partnership, which clearly seemed an example of China wanted to have an increasing role on the international economic system, and there are no United States, there is no Europe. So will that help this model that has been presented by Alessio Amighini of more role for RMB without fully internalizing it? Finally, with Europe, which are the implications for RMB internalization of this comprehensive agreement of investment that seems to be online between China and the European Union? And it was announced, as you remember, online jointly by Xi Jinping, Angela Merkel, and Emmanuel Macron on December 30, 2020. These are the questions that raised in my mind by reading this very interesting book. Thank you.
Thank you, Ignazio, for these very essential and important comments and questions. I propose to give immediately the floor to Xavier Richet as a second discussant, and then Alessia could reply, and then we'll open the floor to everybody. Xavier?
Ton micro, on t'entend pas.
You should open the micro.
Okay.
Marta, it's okay.
Okay. So thank you very much, and for inviting me to participate to this seminar, very interesting seminar, and thank you to Alessia for raising many important questions and topical questions concerning the role of international role of RMB through the Belt and Road Initiative. I agree almost with your observation and analysis, and I think that your conclusion is, raise many questions about the future role of RMB, and of course, it's the question of its internalization. So, as you mentioned, the RMB remains the dwarf in the international monetary and financial field, as shown by the various slides that you have shown, you have presented. But I would like to say that for some times in recent years, the convertibility of the RMB has been discussed in China and always come back. One day there will be a convertibility of RMB. And there are some, let's say, temptation to try to leverage international and external role. Money markets, notably through Hong Kong, has a financial place to issue bonds and so on, and to try to converge between the bond market inside China and outside China. Well, at the same time, the RMB has been both and is both a commercial currency in trade settlement, in investment currency also for financing infrastructure spending, but the convertibility process seems to have stopped, even if the Chinese monetary and financial authorities still refer to it in this near future, have mentioned. And as you mentioned, and I think it's a very important outcome from your research, from your publication, it seems that the use of BRI, the Silk Road channel, appears as a means of circumventing the question of extending the use of the Chinese currency in the various transactions linked to the development of the BRI. And show, as you have shown with the slide, where we can see, for instance, that mostly all financing are made by Chinese financial institutions, and the role of external financing is very low, limited, and almost come from dominated, let's say, international dominated by China, institution dominated by China. So the role of external financing is quite limited in spite of the future need, because if we think, and as you do, that BRI has a future, it means that China will have to leverage more capital that it can do from its own sources. So, of course, we can say that the interest for China is to keep as it works now, without extending and relying on external financing, because in fact, BRE is a package, is a whole package, for instance, for a country which accept to receive help or to develop a project within the BRE. It's like China says, okay, I'm coming with my money, you borrow my capital, I will bring the train, build the roads, bring then after the goods made in China that you will buy. So it means there is a package in the sense that, let's say, the BRE is a kind of synchronization of the globalization. And in that respect, the question is, what would be the place and the role of other funding, let's say, from other parts of the world? So there is a question, we have to question the nature of BRI and its rationale and eventually its needs to, let's say, rely on the help and the cooperation with other, let's say, source of financing from other parts of the world. So, so the role of financing in the various projects along the BRI is crucial and gives a great opportunity to impose the use of Chinese currency. And you have shown through your slides, let's say, the extension of the Chinese currency in this area, but in the same time, you show that as world currency, the role of RMB is still very, very low. So the question, I think that, well, you say that if we expand the role of RMB through the BRE, it will not be a necessity for China to come up with a problem of convertibility. But I think that this is a real problem. And of course, the questions of the future of RMB is linked both to internal problems within China, as it has been mentioned by the precedent interventions, and also with the will and the capacity of China to impose itself in the international monetary and financial field, and not following what we could call a roundabout path, but vis-a-vis dominant currency. So the problem is not facing the dollar or the euro, but eventually, and you didn't mention this issue, how, for instance, it could be at the international level a cooperation which would put at a certain level different currencies and reduce transaction costs and make, let's say, the problem of using, let's say, using RMB as easy as using dollars and also. So I will remind that a very famous French economist from Italian origin, Aglietta, Michel Aglietta, has written very interesting things on that, on the future reform of the international monetary system. And in fact, the problem for China is, well, we go one way through the path, the BRI path, or we can, let's say, find out, let's say, an arrangement and work out a system in which the Chinese yuan will be integrated within the global financial system. Internationally, within China, the convertibility, of course, today is very problematic. And of course, as has been mentioned, it's linked to the distortion of the Chinese financial system. And the banking system, you know, in China, how was, for instance, the head of Alibaba, Mr. Jack Ma, recently said that the banking system in China was between the hand of pawnbrokers, and of course, as we know, this led him to see his empire start to be disconstructed today. So, so this is a problem within China. Is China able to reform its financial system in order to be and to be able to confront, let's say, the foreign currency and the dollar and others within China, and will be able to compete on this field. So this is the first problem. A second problem, which has been raised by Ignacio, is the role of Hong Kong. Hong Kong, and you saw in your slides, most of the internationalizations of the RMB goes through Hong Kong, and it's very important, 75%, if I look at the slides. And what I find very interesting is what will happen in Hong Kong, not only on the pressure of China, mainland China, on the financial system in Hong Kong, but by the US. You know that the role of Hong Kong as a financial hub is linked to its relation also with the US and so on, the facilities that they get. So it means if the US, if there is confrontation between the US and China on this area, what will be its impact of Hong Kong on Hong Kong as a financial place, and of course its impact on the role of internationalization of RMB. So this is a quite important question. I have also other questions which I think are very interesting, and also Professor Muzu has mentioned it, is building up a block, RMB block. So this is very important. But the question is it enough? I mean, of course, more there will be countries and big countries using RMB. Of course, it will expand the role of RMB. But nonetheless, the problem of controllability will be still a question. And I also agree with his remark when the problem, maybe a more important problem, is the digitization of RMB. So how, let's say, development of technology in, let's say, the use of monetary will help to expand because more flexible and so on will expand the role of RMB. Okay, so and the last question, of course, is the final concerns the future of the BRI in the context of the post-COVID re-globalization process, with, as we can see, maybe with a strong tendency to split it around different poles. So it means if we have a kind of fragmentation of the globalization, what will be the room, or would it be limiting the room for the expansion of the RMB? So to conclude, I would say that you raise many and very important questions, and we have not finished to discuss this point. And thanks to your book, we'll have the opportunity to come back on this very important question. Thank you very much.
Thank you, Xavier, for the very interesting set of comments and questions. I think, Alessia, you could answer to these two discussions, and then I hope we'll have time to open the floor to other comments and questions, and for a second final round of and the final answer and comment from you.
So I'll be very brief because you raised a lot of big questions. So thank you, Professor Musu, Professor Richer. I very much appreciate your comments, and I agree with your comments. Very quickly on my list, BRI after the pandemic. there was a discussion on the Financial Times about the fact that BRI is going to die, and this was very biased because they took data from Boston University or something very, very biased, because they only took two Chinese banks actually decreasing a lot their financing of the BRI. And this is, to make a long story short, this is in fact true, but actually most of the financing doesn't come from purely Chinese sources now and last year. But China is starting to switch from bilateral, domestic sources to multilateral financing. First, because they don't want to use all of their dollars to finance the Belt and Road. Of course, they need foreign reserves. And the second is that they don't want to bear the reputational burden of financing themselves all the projects. So the BRI is there to stay. Of course, in terms of size, of cumulative size of flows in 2020, 2021 is less than 2019, but it's still very much alive and kicking. And one of the fields where the bulk of the financing has been going is renewable energies, for example. So it's shifting maybe to other types of projects, but it's there. Of course, then maybe the best, proof that Belt and Road is not only infrastructure is the all types of different and forms of different Belt and Road that the Chinese government has offered to the world. Health Belt and Road, the digital Belt and Road, and the financial Belt and Road. These are there since 2013. I remember back in Beijing at the first Belt and Road Forum when World Health Organization and China signed the Memorandum of Understanding on the Health Silk Road. I was there. Nobody talked about it because that was only intended to be for Africa. Now that the pandemic has come, and she has also called Premier Conte to say, oh, we have it already. Why don't we use it for the pandemic? So you see, this is kind of a multifaceted animal that they have called the Belt and Road, and it's very much the sum of all of these, very different parts. So Belt and Road is a kind of a platform for foreign policy. Economic foreign policy, very traditional foreign policy, any kind of foreign policy. This is a kind of a block of, also in terms of communication, very, very effective. What I call it, bear with me, is the application of international marketing terminology to development cooperation. It's very sharp, but I read it as it is. It's very massive exercising in a narrative, but it's business as usual. Financing at market terms, they call it cooperation, but they actually apply market rates to developing countries, even to highly indebted developing countries, and so on and so forth. So, Belt and Road after COVID, business as usual. Even more, because linking with the RCEP story now that also Muzu mentioned, of course, Southeast Asia has been the first region where Belt and Road actually was implemented. Of course, Pakistan is not in RCEP, but it's there. India almost went into RCEP, and in fact, it's very close to this idea of having an area where preferential, not only trade investment, but economic relations and also political relations actually serves as a kind of a pilot for a new kind of international, say, regionalization of relations. So I think RCEP will be very, very important in terms of implications on and trade diversion with other areas, and also investment diversion with other areas. And also renminbi in terms of eRMB, is going to be used to settle transactions. How? With the digital platform of e-commerce. Many B2B transactions also use these platforms. And this is the way eRMB will actually foster this strategy of having renminbi circulating without reforming the system, by actually inviting firms and consumers to have Chinese platforms, I mean, e-commerce platforms, and eventually to have pricing in renminbi. So, I mean, there's no clear avenue on how to operationalize this, of course, because can you imagine us buying from China from our mobile phone in renminbi? I mean, that's very, you know, out of imagination, but not out of Chinese imagination. It's there already. They are going to that. They are, and this also links to the Jack Ma story, because of course Alibaba and Tencent are the major, you know, actors, and they have been financed with state money massively, up to the point where Jack Ma actually, you know, in I think the week before the IPO should have happened, said that the banking system was so cumbersome and outdated, old-fashioned, that actually the party understood that Jack Ma was not behaving and had too many data on Chinese consumers and on non-Chinese consumers, a lot of information for free, and they were not actually, they were actually risking of being very dangerous in terms of stability, because they were not covering, you know, they were out of, you know, the banking sector, credit sector regulation. And so the party had very strong warning of making rules, but more, even more so, of scolding Jack Ma and the sector to reinstate that the party has the last word in the financial sector. And this is why I was mentioning before that all this engagement of Western money, pension funds, Amundi has a lot of money in Richer, Xavier, Amundi has a lot of money in China, a lot of money, a lot of European money in China is very, very dangerous, because what they are doing is to lock us into the system. And the German manufacturing sector did the same since 1978, back then. And we had a seminar 2 days ago with the Germans, and they have been locked into the Chinese system in the manufacturing sector. What is happening now that they are locking the West in the Chinese system financial-wise by this, you know, kind of inviting to use either eRMB or renminbi transactions, not digitally. But this is the way, this is where they're heading. What should be doing? Nobody's discussing. Nobody is talking about it. This is kind of shocking to me. Then Hong Kong. I didn't want to skip the issue because it's a major issue. I think one of the most interesting issues. Hong Kong is still a very crucial financial firewall for China. They tend not to admit it, of course, because it's been very politically unstable, so very dangerous, of course, because they cannot, you know, anticipate 47, sorry, for political reasons, but actually they had been acting to say phase it out. What the Greater Bay Area is in fact, is a way to lock in Hong Kong's assets into a broader area with mainland China. But Hong Kong is unique. There's not going to be another Hong Kong. The Chinese government wants to convince everybody that Shanghai and Shenzhen are going to be, you know, the new the Hong Kong of the future, but they are not going to be, because the rule of law and all the assets and all the characteristics that actually made Hong Kong what it is, still is, are not there in Shanghai and Shenzhen. So why is the government trying to invest, say, in Shanghai and Shenzhen in terms of financial centers and reputation as being the new Hong Kong? Because they actually want to lock in Hong Kong in the Greater Bay Area, phase it out, keep what they need to keep, so rule of law, window for capital, Chinese capital going out and in as they want. And together with Shanghai and Shenzhen, to have the very, very important stock joint connection agreement with London and with many other financial hubs elsewhere. When I remember once in London last year, no, 2019, last year, February 2020, I was in London and we were discussing, and I happened to say very shortly that London is the Hong Kong in Europe. And blame on me, because they didn't want to admit it, but London is the Hong Kong in Europe, especially after Brexit. They need to have a very large part in it. And with the stock joint connection now, if you are incorporated in London or in Shanghai or Shenzhen, you can raise capital on the other side automatically. And this is a way to just, I mean, have, you know, leapfrog the borders in terms of institutional arrangement. This joint stock, what it is very simple institutional arrangement that actually complement the strategy we were discussing before. What the need to have Hong Kong if I have a Shanghai and Shenzhen with this kind of institutional arrangement with London? I don't need it anymore. Of course, they cannot. If we in the West, we are used to say the good and the bad of our systems to everybody. We are discussing because we are open. China doesn't. China says what she wants to say. She doesn't want to disclose the real features of the system. Of course, nobody would. No intelligent people would disclose the very specific secrets of the strategy to the rest of the world. They don't say we are doing this and that. They just do it. It's up to us to, I mean, interpret and give a meaning to all together. And if you put all the bits and pieces together, trade finance, ERMB, currency swaps, joint stock connections, and all together, you see the picture. Very brave, very ambitious, but it's already there, and it's gaining scale and scope. Another very important point is will China be able to reform its financial system in order to keep up without achieving or going for convertibility? I think that with the ERMB, they are only reforming what they need to have to be able to get out of this financially repressed system, but not to open up. Maybe the other way around, to lock the outside in. They don't want Chinese capital to go out. They want it there. They need it there. They don't want Chinese capital to finance other assets, to buy elsewhere things. They want foreign capital to finance Chinese growth. This is why they are opening foreign bonds in renminbi. What is foreign bonds in renminbi? I mean, they are getting foreign money into their system. And this is, again, part of your picture. They are working not to have it convertible ever. Will it be possible? They will find a way. We should know it now, by now, since, 1949. The objective comes first. We will find a way to reach it. I think we are misreading many of the policies. And the more you study China, I think you will agree, the more you study and the less you know. Because they are really reshaping, reforming, reframing all the policies to change everything so as nothing changes. And this is a translation of one of our,
Yes,
which I think is very relevant. Sorry, we have some questions we can.
yes, thank